Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include: it's Fed Decision Day, my interview with A&D Mortgage's Rich Hoffman on tips and tricks for a successful merger between two mortgage companies and how product expansion efforts will separate successful origination companies in the future, and why we saw a strong auction of 5-year Treasury inflation-protected securities yesterday. Thank you to True and its Mortgage Operations Service, or MOS platform, which transforms borrower documents into instant, trustworthy data for real-time decisioning. True cuts time to critical loan events from days to minutes by using background AI workers to instantly validate data and automate underwriting decisions. Today, we hear from the U.S. Federal Reserve and can likely expect no change to overnight Fed funds. As pointed out yesterday by Dr. Paul Brubaker, the economist who spoke here at the MBA Hawaii conference, the Fed can only shoot at one target at a time: inflation or employment. They have to pick one, and thus far have picked inflation. Some would say so far so good. Besides speaking on that, he also tore into tariffs, and the result on what individuals and countries do in response to them is evidenced by what happened during the first Trump administration. China moving its manufacturing facilities to non-tariff countries to circumvent the tariffs. But back to the Fed. Inflation is almost to the target, and the Fed is running out of excuses to keep rates 100 basis points too tight. The Fed's kind of making a bet that inflation will spike from tariffs, and that will dominate all other economic effects. At this point, they're not being cautious, they're being obstinate. And that's a quote from industry veteran Brent Niatre. We finally saw some minor flight to safety yesterday after President Trump did some saber-rattling by saying everyone should evacuate Tehran immediately and that Iran's supreme leader is an easy target. Oh, also that his patience with Iran is wearing thin. Treasuries responded predominantly to that news, but also to a batch of weaker-than-expected economic data that included May retail sales, which were down 0.9% month-over-month, May industrial production, which was down 0.2% month-over-month, and the June NAHB Housing Market Index, which came in below expectations in its prior reading. Keep in mind that all of what I just mentioned, in theory, leads to lower rates. For today's interview, I wanted to welcome to the show A&D Mortgage's Rich Hoffman to talk about tips and tricks for a successful merger between two mortgage companies and how product expansion efforts will separate successful origination companies in the future. He's SVP, TPO National Sales Director at A&D Mortgage and has over 30 years of mortgage banking experience, including 21 years at Flagstar Bank. Due to the company's recent mergers, he's bringing his expertise in agency and government loans, now backed by the number one non-QM lender in the space.
A&D's been really active recently, if you will. Brought on part of Flagstar, brought on the conventional and correspondent lending division, Mr. Cooper. Could you bring people up to speed on everything that's been going on at A&D? That's probably a good place for us to start this.
Sure. Yeah. No, it's a great place to start. So I guess we just closed April 1st on the transition. So the Flagstar team went over to Mr. Cooper initially, and then the Mr. Cooper then sold our TPO franchise along with our operations team that went over to Mr. Cooper over to A&D. Probably about maybe 30, 60 days after. So we've been here. This is month 3 right now. So we brought over our entire sales force. We brought over our entire ops team, about 250 people there on the ops side. So underwriters, closers, post closers, everybody. And really the goal for A&D was, they've been, present and consistent in the non-QM space for so long, and they do it so well. Max's goal was really to sort of build out the GSE side, right? And that's why the Flagstar alternative was extremely attractive to him. And so they did GSE business, Fannie, Freddie, FHA, but was somewhat ancillary in terms of what the makeup of it was. So us coming over, our job is really to help to grow that out and to use our expertise with, we've been doing it for over 25 years at Flagstar, probably one of the most consistent operations in the industry for a long time. So that's what we're trying to do here. So now if you combine the two, we're pretty much a one-stop shop, if you will.
Yeah, I was going to say, it's almost refreshing that you have the acquiree's perspective or the outsider perspective coming into this. So when you look at what A&D is building, you obviously have a more intimate knowledge of it than somebody on the street, but coming in with a fresh lens, what does it seem like y'all are building towards? Obviously, there are grandiose plans.
Sure. Yeah, no, absolutely. It's really cool. I tell a lot of people, I was at Flagstar for 25 years. And when I came to Flagstar, I had the same feeling about AD that I did then, just in terms of the growth strategy. It's a young company, nimble, very entrepreneurial, very, very, very heavy in technology. Everything that we have here is proprietary, built ourselves. So the commitment there is fantastic. And we're continuing to develop and roll stuff out on a regular basis, which is fantastic. So it's unique in the sense that it's not somebody that's just committed to the space and committed to the business, but really wants to do it the right way. And being part of something like that and helping build it out and grow it is going to be a lot of fun. So I'm looking forward to it.
I'm ready to interview you next time when you've changed your name to Rikov Kofmanov, because everybody I talked to at A&D, there's a Russian influence. It's pretty cool. You're like the first true white guy I've talked to. So that's neat. When I look at the strategy, I see the vision being that we're going to solidify our place in residential mortgage lending by improving FHA loan programs, which is incredibly timely considering some of the uncertainty at Fannie and Freddie. And so why the FHA market? Why the focus on that? Why does A&D believe that that's a good strategy moving forward?
It was a significant part of our offering at Flagstar and for our customer base is really what it boils down to. I mean, our customers have been fantastic. They've followed us every step of the way, and they're used to utilizing us at Flagstar for a long, long time. In terms of our government lending program, we did a good job of building it, organically through a lot of years of hard work and doing it the right way and hiring the best underwriters and the best people supporting that business. And so coming here, they did FHA, but just really, again, not to the extent in which that we did. So these are some of the changes, whether, lowering the credit score a little bit, allowing for manual underwrites, allowing for manufactured housing for FHA. Those are the type of things that our customers are accustomed to. They're accustomed to that offering. And so being able to offer the same product set here is really step one.
Then when it comes to benefits from all of this, I want to focus on A&D's partners out there, because obviously there's borrower benefits to some of the scale you're doing here, the cost of funds or whatever it might be. But when it comes to partners, and I say that because most of the people listening to this work in the mortgage industry, can you explain some of the benefits to those companies that you all do business with?
The best thing about FHA is, it in my opinion, creates even larger opportunities for home ownership, right? I mean, you just take the manual piece for example. You've got borrowers that, overall they deserve a home, and there's plenty of compensating factors that FHA you can take into consideration with government lending, with FHA specifically, that you can't necessarily do on the agency side. And so, the borrower's financial ability to repay is probably the most important thing. And FHA really makes a point to make sure that you take that in consideration. If that's the case, then that means homeownership for somebody that may have otherwise not have had that opportunity.
I'm going to drink the Kool-Aid here a little bit, or preach the gospel
Right.
to people, because it seemed like several months ago, companies that focused on a niche product were the ones that were succeeding. We do this really well. We stand on our lane.
Right.
We're going to be profitable. There's also a school of thought that says, I want to be able to offer all these programs so that I don't have to turn borrowers away. Maybe they'll go down the street to a competitor of mine. A&D seems like they're doing both really well in terms of, we're going to focus in all these lanes and we're going to be really good in all these lanes that we're focusing on and continue to add products. Is that a good way for me to view how y'all?
Yeah, and that's fair. I mean, look, we here at A&D, we're the number one non-QM lender in the country. And so the way I look at it is, and the way we look at it here is, they were one of the best at doing non-QM. That was their wheelhouse. That's how this company was built. And then at Flagstar, with our group and our team, we were one of the best at GSE lending, right? At agency, government, FHA lending. So we're really just bringing, what we did best together, right? And so it's a little bit different than saying, well, we want to go out and start to do FHA. I mean, we're bringing all the expertise with us, right? We're bringing all of our underwriters, we're bringing all of our support staff. So you're bringing really the best of both worlds together, but for two entities that did what they did very, very well, and you're combining those two. And I think that's a little bit different than just saying I want to go out and start originating a product that I really don't have any experience with.
And obviously, you said you've only been there a short time frame, a couple months now. But when it comes to the culture you see, I joked about the Russian influence. I don't know if y'all have like a bathhouse there that you go to. There's
If we do, I don't know where it is.
yeah, exactly. Well, yes, maybe I should have chosen a different Russian tradition besides a bathhouse. Maybe there's an ice rink where people go skating after work, something like that. But when you look at the culture of A&D, it's always hard when we talk M&A, companies merging cultures and becoming greater than the sum of their individual parts. What's the culture like, and how have they helped Flagstar's division, Mr. Cooper's division, assimilate into the company?
Yeah, it's a great question, Robbie. I think the culture here to start is it's young, a lot of very young professionals, which is great for our business. That's number one. Number two, very, very passionate. We were working on this for several months before we actually started day one, obviously. And, the first thing that I noticed was how passionate and genuine people are and how much they love this company, which is really, really cool to see. So people work very hard here. People are extremely passionate, not just about the company, but about their job and what they do and serving our customers, which is fantastic. And so when we brought in our team, it's interesting because, to your point, it's not always the easiest thing to do. Sometimes it's tough to bring two teams together. We had so much, there's so much talent here already, and then we're bringing in our existing talent, and it's really finding the best place for everybody to be, right? And you can never there's no such thing as having too much talent, right? But it's been really unique because I think we've both learned from each other in a lot of different ways, and we're starting to settle in now. We're starting month 3 here, so each day and each week we continue to get better and better. So it's been a lot of fun.
That's cool. That's good to hear. And let me close with this. You don't have to give away any specifics, but when it comes to kind of the vision of where the company's headed from here, what can you say about how do you think the company will continue to grow and expand and move forward?
Yeah, I mean, what I'd tell you is, we've had tremendous success already. I think we've done extremely, extremely well here in our first couple months, and the momentum continues to grow. We have big goals here. We want to grow this thing back up to the levels that we were at Flagstar prior to going over to Mr. Cooper, and then continue with our sales force to help build out what AD already did well, along with what we did well, right? So all of our sales force now has more tools and more resources than they previously had before we were together. So when you combine those really thoughts and resources and tools that we all have in our back pockets, the sky's the limit. So without giving you numbers, which we certainly have a lot of goals, I think there's a lot of folks that may not have heard of A&D, but I think there'll be a lot of folks that most certainly will as we continue to move forward this year and into next year.
Yeah, this is not a sponsored interview, but I certainly agree with that sentiment. The A&D's coming, and if you haven't heard of them yet, which you should have, you're certainly going to. So I wish you the best of luck with that mission. It was a pleasure talking to you, and hopefully we'll have you back on the show.
Yeah, Robbie, I appreciate it. Thanks for having me. Take care.
Yesterday's $23 billion auction of 5-year Treasury inflation-protected securities, or TIPS, went very well, showing strong demand from investors as rising geopolitical tensions and higher energy prices have added yet another level of uncertainty to the outlook for consumer prices. The final yield came in lower than expected, a sign that buyers were willing to accept a smaller return in exchange for inflation protection, suggesting high confidence in these bonds. Nearly all the bonds, greater than 93%, were bought by investors outside of the big dealer banks, which is more than usual. The auction also saw a healthy level of interest, with more than 2.5 times as many bids as bonds available, better than the recent average. Leading up to the auction, prices on 5-year TIPS were already climbing, and after the strong results were announced, they continued to rise, showing that investors remained eager to buy them even after the sale. Mortgage applications for new home purchases fell 4.5% compared to the previous year and dropped 9% from April, according to the May 2025 data from the Mortgage Bankers Association. This decline, unadjusted for seasonal patterns, reflects growing economic uncertainty, rising mortgage rates, and increased competition from the existing home market. New home sales are estimated to have declined 12.1% month over month to a seasonally adjusted annual rate of 631,000 units, with the actual unadjusted sales falling to 58,000 units. Loan types showed 47.3% of applications were for conventional loans, 37.8% for FHA loans, 13.8% for VA loans, and 1% for USDA/RHS. The average loan size rose to just above $379,000. The MBA's Builder Application Survey, which often leads official Census Bureau data, suggests buyer hesitation amid shifting market conditions. Ahead of tomorrow's holiday, today brings the latest decision from the Federal Open Market Committee, where the Fed is expected to hold rates steady and indicate rates are expected to remain on hold at the current range of 4.25% to 4.5%, likely until at least September. The statement and updated summary of economic projections will be released at 2 p.m. Eastern, followed by Chair Powell's press conference. This all comes amid a deteriorating economic backdrop. Retail sales show that consumption is struggling and the labor market has softened noticeably. By holding rates steady, the Fed is betting that inflation will spike from tariffs. Keeping rates around 100 basis points currently above neutral doesn't have much other justification. Today's economic calendar kicked off with mortgage applications decreasing 2.6% from 1 week earlier, according to data from the Mortgage Bankers Association's weekly mortgage application survey. Today also brings weekly jobless claims, May housing starts and building permits, Treasury announcing the auction sizes for month-end supply, and Freddie Mac's primary mortgage market survey. Before the open, Sweden's Riksbank was out with its latest monetary policy decision. No change in the repo rate from 2.25%. With all of this as a backdrop, we find agency MBS prices roughly unchanged from Tuesday's close, the 2-year yielding 3.95 and the 10-year yielding 4.37 after closing yesterday at 4.39%. Let's wrap up with a joke and some housekeeping. So there was this king in Hawaii living in a straw thatch style palace whose hobby was collecting thrones. Anytime some local carpenter created a new ornate chair, he had to have it for his collection. The guy was wild about them. It was his one true passion in life. Well, one day, lightning strikes during a thunderstorm, and his palace burns down, including his entire collection. He was crushed, never the same afterwards. Well, you know what they say. People in grass houses shouldn't stow thrones. Thanks again to True and its mortgage operations service, AI Background Worker, which transforms borrower documents into instant, trustworthy data for real-time decisioning. True cuts time to critical loan events from days to minutes by using background AI workers to instantly validate data and automate underwriting decisions.